welcome back, everybody. My name is Darson Grantham, and this is kind of our YouTube channel, YouTube show, where we just talk about local real estate, local economics, national real estate, a little bit of national economics, and just our experience. My name, again, is Darson Grantham, real estate agent and investor here in Des Moines, Iowa at Keller Williams. And co-host is Jared Huseman. I'll let him introduce himself.
Yeah, Jared Huseman here, president of the Catalyst team, part of KW Commercial. Our team specializes in multifamily apartment sales across the state of Iowa. And kind of like Darson said, we do this every week. We just kind of talk about what we're seeing in the market, what's local news, what we're seeing for there. And then we also just kind of talk to about usually a theme every week. Try to give you ideas on ultimately help you make more money, whether that be in business, and whether it be in real estate, or sometimes it should be financial planning as well, being more motivational, whatever it may be. What we're trying to ultimately always offer you guys value and lessons that we have learned, either the easy way, the hard way. Or continue to learn. Yeah, I mean, one thing I was thinking about here as well, I mean, someone's actually the other day, but it's interesting. I was adding up how much I've spent on courses over the years in my head, how much I've learned all this. And in trying to take what I've spent thousands of dollars and years learning to try to help someone else avoid the pitfalls I make. And the interesting part is I was thinking about is even though I can try to give knowledge that, people are still going to make the pitfalls probably themselves. I know because I did it myself.
Oh yeah, it's crazy. You can learn you can think you learned everything, and then you actually take the action. And you're like, oh shit, this isn't exactly how it was supposed to go.
Well, and then I love what I was learning. This kind of ties back into our podcast too. Is that, or what we're doing here, YouTube is how much the information now. You guys, anybody out here watching, you guys are so lucky because how much information now is so free. I mean, it's just out there.
I don't remember a time when it wasn't.
Well, I remember a time when it wasn't.
Whatever, you're younger than I am.
You couldn't access it.
Like what?
Yeah, but I've been studying real estate since 2006.
So at what point, could you not access it?
So 2006, 2007, we didn't have YouTube. We didn't have Bigger Pockets. We barely had Facebook. That was barely coming out. We had online chat forums, if anything, where you could find stuff. Yeah. But it was essentially books. It was the Carlton Sheets, buy these videos and learn it. So you could learn these things. But it was so old school, so siloed. And again, you had to still pay for it. You could Carlton Sheets, you do these guru trainings. It was paid for. Nowadays, with the birthplace of just social media, with Bigger Pockets, with YouTube, with the internet, there's just so much information out there that's for free. You just need to be a little resourceful in how you find it.
Yeah. I mean, and then it's a pendulum. So it swings from nothing or almost nothing to holy shit, drink from a fire hose. Yep. What do I listen to? The reason Bigger Pockets is a big deal is because Google is a shitty resource to figure out how to invest.
Yep.
It doesn't, you have news articles in Huffington Post and New York Times of how do you invest in real estate? Well, you buy something and you rent it out.
Right.
Well, come on.
On the same point though, Bigger Pockets is its own little, vortex of doom where people are telling you, one person's telling you how wholesaling is great, next person's telling you how they want to flip. We had a conversation just before we walked in here about someone who was talking about whether we like to flip or rent properties. And I said, one that I hate doing, this is, by the way, just off the cuff, I hate doing contract sales. I did them over the years. I hate it. All you do is lock in your profits, and you lose all potential for future growth. It's not a bad deal in the short term, but if you create long-term vision, doing a contract sale on a house is no different than buying a stock at $100 and saying, I'm going to sell it for 102, 103, and then having no faith that that's going to go up or down. I mean, it's just...
we can dig into this at a different time. I disagree with you.
This is the point I'm making, though. Exactly what I'm saying, though.
Matter.
Is that at the end of the day, everybody's going to tell you what their perspective is, what they love the best, what they like the best.
Yep.
And so we've swung so far to the pendulum on the other side of that thing. And for anybody out there watching, I'm sure you guys have probably felt it. I know I have, where it's what the hell do I do? There's so many things I can do. What do I do? I gave advice to someone this week. I said, I really recommend... At least in the beginning, this sounds really bad, but be willing to break even or lose a little bit and try a little bit of everything for your first couple years, because then you're going to figure out what you like, what you're good at, what you enjoy. I don't believe in the statements that some of these gurus preach about do only apartments or do big deals only or do houses or do this or do that. I think there's so many ways to do it. I know that some of the gurus say, oh, well, you can't do houses because you can't scale that. That's complete bullshit, by the way.
You can't scale it in 1 year.
Yes, you can't scale in 1 year, but there are massive companies out there that do home building or buy huge communities up and have scaled on thousands of homes across the country. So anybody says you can't scale a house is completely fucking lying to you, and they are just trying to sell you something about why their idea is the best.
Yeah. They're trying to focus you, and there's nothing wrong with focus. It's awareness. It's a self-awareness thing of like, can you focus or can you not? Like, I personally, I need help focusing like you wouldn't believe.
Yep.
So I know that I cannot try to study, XYZ. I mean, large apartments. Like that's why I say about 2 million is the most that I'm really dipping my foot in most of the time.
When you're selling, you mean?
Selling or buying? Yeah, selling or buying.
Personally, or as an agent?
As an agent.
As an agent, yep.
Yep. Personally, I'm still under that. But like, just it's focusing your time and.
Yep.
But whatever. Okay, so
I will say real quick here on that. If you look at the truly greats of any business or anything that's been great throughout history, they've always had the ability to focus. That's really, we joked about a few weeks ago even about, as an entrepreneur, why hire an employee? Because you're going to get bored in 6 months and go do something different. But the ability to focus, I think, is so underrated. So,
yes.
Anyway.
It's like, when you say that, what happens in my head is a drip of water that falls on a rock for thousands of years, and then there's a hole in the little rock, and I'm like, that's focus.
It creates a Grand Canyon.
Yeah, like that's literally what went through my head.
Yeah,
so
like literally, that's the funny part is that if you take the smallest activity and you do it over and over, go over again on a daily basis for thousands of years, you create the Grand Canyon. The simplest thing, water.
Have you ever read the book Compound Effects by Darren Hardy?
I have not.
Oh, you'd love it.
But it's not. But
it's that.
And the thing is that compounding effects. Understand that compound effects. The whole point of that is, don't forget the first word, compound. Okay, the first day you're not going to see effects. You're not going to see effects in the first 10 days or the first 50 days or the first maybe even 3 years. It's doing these things consistently, focused over time, where you create the results.
Yep.
So anyway,
that was our tangent. That was
total tangent.
Okay, so let's talk about what's happening in the local and national news, real estate market, all of that. And I'll start. I'll let you think about it.
Yeah.
One stat that I looked up this morning because I was just curious. On the residential side, a lot of people are saying, price decreases are everywhere. Everyone is price decreasing. What's going on? This place is a mess, right? Now, lots of data that goes into why properties decrease. I mean, have decreases, have listing price reductions. But what I did is I looked up on the small multifamily world. And in Polk and Dallas County, there's 24 total listings, and 15 of those have had price reductions.
Okay.
Now, like, what's that actually mean? So that's like 62% of the listed properties have had price reductions. But that, I mean, I look at it as the list price on any property, especially in multifamily, small multifamily, where a lot of the agents don't particularly know the market very well. Like, the list price is very much shot from the hip. It's very much a guess. They kind of run a price per square foot comparison is what I've heard some other agents do. And I'm like, it's based way more on rent, but whatever. And so the price reduction thing, it could be a combination of, yes, properties are not selling for as much as they were in March when these properties were listed. Fine. 2, they're probably quirky. I've walked almost everything that's on the market. They're quirky properties. Like those are, I mean, what else?
Well,
3, just like you have agents that list something that are questionable decisions. Or the seller's like, let's throw a dart. I've got one listed right now. Seller said that. Let's throw a dart. Let's see how it goes. And it's gone. I mean, we've had some showings. We've had a price decrease. It's the best cash flowing property on the market, in my opinion, but hasn't sold yet.
Right. I mean, at the end of the day, there's a lot of reasons why prices reduced. And I saw something I'd love to hear your thoughts on it. I think it was this morning in the Des Moines Register or in the news. House in stock was at 272, down from 280 or something. I believe 284.
Active listings.
The sale prices in the month of July, I think, as opposed to the month of June. Does that right? I don't know.
Yeah.
I just heard this. I want to ask.
You didn't know this? You didn't know about this?
So I'm asking the professional here.
So yes,
asking a professional what these numbers mean, because I read the headlines and I've learned to not just look at the headline. So I'm asking the professional here, for anybody watching, take notes.
Yeah, so I love, like, the fun thing about that is you have to know what each thing means and where it comes into play. This is data from the Des Moines Area Housing Stats, basically. It's DMAR, the local housing authority.
Okay.
The median sale price is down from 283 to 272. So
that's what I saw.
Whatever that is. Home sales, the number of sales is down 14% from June to July.
Okay.
Now, what I haven't looked up yet is the average sale price, because a median sale price. Let's just think about the word median and how that average works, right?
Because pull up. Yeah, median
versus average
are two different numbers.
Way different. And your median is like, take 1,000 properties were listed, 100 properties are listed on the market. And if you go to the very center, what are the 50? What's the number 50? What was that price sold? That's the median.
Right.
That's my definition. I think that's what I learned in grade school.
Yep.
Average would be if you added all the values up and you divide it by 100, the number of total listings. And consistently, that average number in Des Moines is higher.
Okay.
And it has not went down.
Okay.
Year over year. It has went down from June to July. Right?
Okay.
So year over year, when you compare July 2022 to July 2021,
Okay.
like that, the price is still up 9%.
So the interesting part about that, though, as you say, it makes me think, and I'm thinking out loud here, so give me a moment here. But if we were to compare whether it's apartments or whether it's a house, and we compare the median sale price of a home to what the average is, that can also be, I think, an indicator of where we're. Well, I mean, let's say the average price per home was, like you said, let's say we have 100 homes that are sold. It's just easy numbers. Okay. Let's say the average was 300,000. Easy numbers again, too. But the median was showing at the 272 number.
Right.
So what that means is, if it was in a graph, in a mathematical area, the average is 300, but the median is 272. That means that more houses are selling on that lower price point, so that graph has skewed compared to the average. So if the median is actually higher than the average, then we're seeing more of a rush towards the newer high-priced homes. Because that median, that number, falls less than the average, we can then pull out and extrapolate that people are looking for that lower-priced home right now. So that's information. What do you do with that? So anybody that has, for any investors out there, if you're looking to flip homes, if you're looking to invest in the market, that's people are looking. Is it that smaller price point, that 270? Even though the average might be 285, 260, we're showing the median. Just look at the median, the average, comparing them. You can see what's getting the most.
That's one way to do it. Other days on market for anything under 300,000 is way lower than anything over 300,000. It's like a month and a half is average days on market for that. So I mean, we can get into tons of data, tons of stats out there. The market is down from June.
Okay. So that's what I was actually going to talk about on my side of things. Is I had a conversation this week, and we talked about last week. The CPI came in lower than expected last Wednesday, and what kind of it's been talked about a couple of times. This is still a handful of conversations. Is maybe we are going to get what they quote unquote call a soft landing. Maybe the Fed did enough to raise rates to cool everything down, where CPI is coming in less. Maybe we're not going to have a recession because employment's so high, or it's going to be a very shallow recession because we're seeing housing price drops, and the potentially, again, not right now, maybe not in a few months, but coming into 2023, we might start seeing price growth come back up. Might start seeing things rise a little bit.
Right. You're saying we've had price drops. If you compare year over year, we have not had price drops.
Right.
You can't. In my opinion, the housing market is so cyclical based on the season.
Right.
For us, you can't say that June should be or July should always be higher than June. Right. Look at a year over year.
Right.
Right. Because in Iowa, there's about a 5% to 8% difference between the peak of the market in March and August. And if you look at average sale price.
Yeah, because both people also hate to move in the winter or the fall. They hate to move in the spring. It's easy to move in the summer.
And the holidays.
Holidays, whatever it is.
So someone asked me the other day, what do you think about the market? And I'm like, well, it depends what you're doing, blah, blah. But if I had closed my eyes to all and ears to all national, it would feel like a regular seasonal housing market in Iowa.
Interesting.
Just would. The last 2 years have not had that.
See, for me, on the commercial side, I would say it's been different because historically speaking, what we've seen happen is a lot of our deals close up in the summer months, second and third quarter a lot. First year, everybody's ramping up because they're new year, new goals, and it takes, again, for us, a few months to close. So we usually see a lot of closings between literally from March till about August, September because everybody's trying to buy stuff. And then we start seeing a slowdown. Usually we see a slowdown in March, April, and we see a slowdown again coming in October a little bit, maybe a little November, with, again, a final push to buy stuff before end of the year, December. Yeah. But we see a big push between this, because, again, ours take longer to put together, and ours aren't based on seasons per se, because people are buying apartments any given day for the income. Yeah. They're not looking to make a move and move all their stuff. So we don't really follow the cycles, the cyclical factors of the weather and the patterns.
Of the weather, but there's still the investor mindset, cyclical patterns. Right. First of the year. Right. Get your taxes figured out. Get it finished.
Well, the interesting part is it's amazing how with us working with investors and clients that are more commercial grade apartments, it's interesting how the mindset is still the same no matter what. There are people that are still going on vacations. I don't want to buy someone on vacation. I still want to see my family. Again, there's still a psychology to be played, no matter who we are. Because at the end of the day, people is people. That's one thing I love about business. Is I know in commercial we talk about like, well, here's what we're seeing in commercial, and this is all logical. I can tell you right now, there's as much emotion involved in commercial as there is in residential. Because at the end of the day, people are still people, and people drive business. So, but anyway, but what I've been hearing again, kind of is that maybe things are going to be okay. Maybe things aren't as bad as they thought. I'm not saying that we're going to be like hunky-dory, everything's going to be great, but there's definitely been a slowdown, and I think there's maybe some silver linings, some light in the tunnel that commercially we're seeing in the apartment world. And the thing is, I'll say as well, a stat I read the other day, which is great, this ties into both our markets really well. For any owner who has a small multifamily investment property, and they're selling right now, maybe they don't have price reduction, they're still not selling. What's been really common is most sellers are saying, hey, look, I'll just hold it for another year because I still think that rents are not keeping pace with inflation, and rents still have to go up more. So even if cap rate remains the exact same, we see rates stay the exact same at 5 and a 5.5, but my rent goes up by 10% next year, I'm going to be able to get back to the price I wanted today.
Yeah.
So we're seeing that a lot in the apartment world right now. Is sellers are saying, look, I'm okay to hold it because I think my rents are still lagging behind inflation, and once all these rents raise over next year, I'll get back to the sale price I wanted to get today.
Yeah. I mean, they will. Like everything I'm seeing on the rental, it's still like.
Yeah, absolutely.
If you have a clean place and it's like in a decent location,
yep,
you're going to get way more rent than you currently have.
Yep, and that's across the U.S. and it's not just Iowa based. I mean, Des Moines, we're seeing that pretty much any metro, especially if you're down to the south, north, New York City. You know, maybe a Minneapolis area, you might not be as aggressive, but anywhere down where you're getting to the warm southern states, we're continuing to see that push of people there. So again, one thing I'm seeing in the market, one thing I'm hearing when it comes to what my clients are talking about.
Cool.
So, we talked about maybe want to talk about again leading indicators and kind of what this all means to us going forward. Earlier, we were talking a little bit about things that we do or look for when investing. Things that might be leading indicators, not necessarily in the financial aspect, but leading indicators of what's to come for any investors that are watching.
So, what, like city-wise. What got us on this topic is we were just talking about Des Moines in general and the growth of Des Moines, the sides of Des Moines that are growing. Some are more residential, some are more commercial. What does that look like? So those of you who don't know, most of you probably knew, Des Moines has I-80 goes east-west, I-35 goes north-south. And so Des Moines is not a huge city, under 1 million people probably.
Like 700,000.
Yeah, right? And so it's not large, but it's on two very, very main interstate intersections. And where, like, if you're investing in Des Moines, we were trying to decide, would you go to east-west, one of those interstates, or would you go north-south to I-35? And we're not talking about a large distance here.
No.
So yeah, we were just talking about the business, the growth of each smaller city around the big metro, and how fast they develop, how slow they develop, right? Because those of you in the Des Moines area, you know, like Ankeny just took over the growth of the fastest growing city, or the largest growing. It's
the largest population versus by number 2 in this state. It was Des Moines and West Des Moines. Now it's Des Moines, Ankeny, then West Des Moines for number population. So Ankeny's growing faster than West Des Moines.
I thought they passed Waukee. Okay, anyway.
Doesn't matter.
Either way, Ankeny's just growth crazy.
Yeah. I mean, at the end of the day, guys, it's one thing we were talking about here is, again, Des Moines is a small market. It's funny, I was thinking as you were speaking, but we always like to brag that Des Moines sits on the crossroads of 2 major interstates. But the funny part is, if you look at almost any major city, they all have interstate access. So just FYI, when people say, oh, well, we have 2 interstates, great. So does Chicago, so does Madison, so does Minneapolis. Like every major city is going to have interstates because that's why they're a major city. I mean, there's the thing. I mean, you want to ask people to go. There's a reason, and I make this joke a lot, but you know, people in the old days, 100 years ago, would invest along rivers and railroads because those were things that helped people move goods across and logistically were what drove business. The same is still true. All that we changed was we had, first it was rivers, that was years ago, 150 years ago. Then as the railroads were developed, it became the railroads. And then in the 50s, it became interstate systems with the Eisenhower system. And then maybe the next is these bullet trains. That's why everybody's so bullish on these big bullet trains and the growth of that are these.
I have not done any research on it.
Right, we're not even going to get into that. But the point I'm making is that at the end of the day, and this ties back to where I was going to go to on this, is that infrastructure on a massive scale will always be what drives growth. So bridges across rivers, that always drove growth. You go to railroads, that always drove growth. Interstates always drive growth. So whenever you're looking to invest, always look where the infrastructure is going. If a city is putting plans in place to put in a whole new road or a whole new highway system or a whole new interstate system, whatever it may be, or a whole new intersection, maybe an off-ramp of an interstate or a highway, that's where growth is going to happen, because they are going to put a lot of money to that area to develop. And then I want to say as well, most people don't realize this too, but just like every investor has their own prerogative of what they like to be and what they want to do, a lot of lenders have their own prerogative of what they like to do and what they like to lend on. Remember, cities are the same way. Most people get that, but there are certain cities out there that absolutely have said, and I'll give you an example here. In West Des Moines, in our market, West Des Moines has said, we want to be the retail mecca of the market. And we don't care about people per se. And I'm not saying that in a negative way, but they have said, we want to have retail, and they've said that for 30 years. That has been their draw for the market. Ankeny has said, we want to own families. We want to have more families here. We want to be a family.
Pumpkin latte capital of the world.
I know, right? So here's the reason I'm saying that, is that cities, even though, again, you look at infrastructure, what's going first, cities can have their own feel. And by cities, I mean the manager, I mean the city council, I mean the economic development, but they can have their own taste and feel of what they want to see develop out. And I'm telling you right now, it's a lot easier to develop in a city when the city's on track to what you want to invest in. If you want to build or own industrial in Ankeny, maybe, might be a great area. Own industrial in West Des Moines could be really tough, guys.
Yeah.
Just because of what you're looking at.
Yep. Yeah. So I mean, basically, that comes down to know what asset class you're looking at, and don't try to fit a square peg in a round hole.
Mm-hmm. Yep.
And if you do, great, you made a lot of money.
Yep.
But it's a lot of risk. You're picking a city, and you roll with the punches.
Right. Well, here's the thing too. Let's just say you do want to follow. You say, okay, I think this city or this town's gonna be the next area, so I want to do a big development in it. Whatever it may be, doesn't really matter what it is. And let's say you do finally push that square peg through the round hole. By the end of the day, you probably spent so much effort and time and money that you might have made profit on it, but it's probably not anywhere near what you wanted to actually make on it. So
yeah, that's hard. It's just
always,
generalities. Yeah.
Just always think about again where you want to invest. And we're going to joke about this here, and feel free to hit back on this one, but we have a joke here amongst investors that the city of Des Moines hates investors right now, or hates landlords, because they've been so tough on inspections right now and so tough on landlords on everything. So the joke is like, well, Des Moines must hate landlords.
It's funny, they do that, and then I do some research. I'm looking at Airbnbs for some clients, right? And I call the city of Des Moines up, and I said, hey, what's your Airbnb policy? And they're like, well, you have to have a rental certificate, and then you can Airbnb it. And I said, so every single Airbnb has to have a rental certificate. They're like, yep, unless you live in it, it has to have a rental cert. There's no way half of the Airbnbs in Des Moines have rental certificates. There's just no way.
Which means people are running illegal Airbnbs out of their units.
But they don't care. The city of Des Moines, they care, but they don't care.
Right.
So they care about some investments, but not others.
Right. Well, what it comes down to, and we can go into some more, it's all about essentially follow the money.
Yeah,
we can go into this a lot.
I get it.
But at the end of the day, again, every city has its own nuances. And when you're looking for areas to invest in or you want future growth, look to what that city's doing. So again, one of the reasons all came up was another agent in our office was talking about the growth of one of these outside cities and how it was going to be the next area. And maybe it is. Maybe I don't know about the politics of that town. I don't know enough development. I truly don't know it. But again, I try to look for as easy ways as possible to invest in real estate and make money, because investing in real estate is already hard enough. There are so many things that can go wrong and so many risks in there that why add an extra layer of risk or problems when I could just go and follow. Sometimes it's okay to follow the crowd. I guess I could say that.
Yeah, well, it's just one of those where if you're going to invest in a small town that's 30-minute drive from a large city, they need to have a draw, and to say that they're going to be the next West Des Moines or Adel or whatever in the next 5 years, like in real estate development, 5 years is really short.
So
it's really short time frame. In 50 years, maybe, right? Like that makes sense, but 5 years is so short in real estate investing.
So this is something I actually had this conversation with a gentleman last week. Actually, we were talking about for years now, a couple of years even, the last few years since I've been in a commercial real estate agent. People have been talking about in our market Waukee and the Kettlestone project. Kettlestone's a massive development. Again, a lot of infrastructure got put in there from the city.
What's the Kettlestone? Is that
Kettlestone is Grand Prairie Parkway.
Grand Prairie Park, okay.
Grand Prairie Parkway. Again,
the most confusing intersection in all of the state of Iowa.
This ties back to what we're talking about. People were following the infrastructure. People followed the infrastructure. Waukee, give them credit, put infrastructure in. They put in roads. They put in massive intersection there to be off the I-80 and to open up a new part of their city to grow and expand. And someone said Waukee's going to be the next area. Here's my argument against that. Jordan Creek Mall opened in 2002, 2003. I don't know, it's about 20 years ago, give or take.
That was before I could drive, before I could do anything.
Yeah, 2004 is when it opened. When it opened there, it was in the middle of nowhere, and it was opening up thousands of acres of development. And now, 20 years later, we're still seeing land around there just finally developed.
Just now.
Top Golf's got announced, and then we still have the Mill Civic EP True land there, the Mill Civic and 60th Street corner being developed next to the golf area. So it took 20 years to develop out every parcel. Now, were there some developments that happened right away off Jordan Creek? Absolutely. But it took 20 years to develop out that one area that is now the hot area. So when people say, oh, like I hear a lot, hey, Dell's the next area, whatever it may be. Well, Waukee's first, and Waukee will probably take 20 years to develop out, at least 10, 15 to develop out their whole area as well.
They just announced a mall in Waukee.
They did. It was Mike Pearson, actually, in Pearson Development, is actually the one working on that. Okay. So I know who the client is, well, without saying too much. But anyway, the point I'm making is that there's still so much development happening in the closer areas of the market, the Urbandales, the Grimes, the West Des Moines.
You ever drove to Johnston or
Johnston's got a lot of development going on.
There's more damn cornfields than there are houses.
Mm-hmm.
It's wild.
There's still so much development happening here. And so, again, when you're choosing to invest your money, whether this be in houses or whether it be in apartments or things, just ask yourself, why am I investing where I am, and what is that plan? Like, I know one, again, I'll make another example, guys, back to local market. Another area that we'll always see is Polk City. It's never going to grow just from the sheer fact of two things. It's got a lake surrounding it that you can literally not get around. And you
can't build on it.
And you can't build on it. You cannot build. There's not enough population to build a highway or interstate or bridge over the lake to get to the other area. So at the end of the day, that is always going to geographically confine the Polk City area. Now, the Granger, Urbandale, Grimes area up to the north and around it, that could grow faster, and they could grow around it. But you need to look at these things when you're investing to understand the geographical pull and the range.
Yep. And, I mean, it goes back to looking at the trends, looking at the city plan, city development.
By the way, if, I don't know if you have or not, I have. If anybody out there is wondering, you can pull up every city's plan for 20 years. It's called their comprehensive plan. Every city has to do it every 10 years. It's called, you can Google its shorthand, it's called comp plan. But if you Google Des Moines comp plan, West Des Moines comp plan, Ankeny comp plan, or comprehensive plan, you can legitimately read through the city and they will tell you where they plan to see development and growth.
Yeah.
By the way, and if you're new to the market, you should absolutely be using those for no matter where you go as a due diligence item to invest and review.
Do they do them all the same year?
No.
Okay.
West Des Moines, I'll give them credit. West Des Moines did theirs a couple years ago. I was part of some of the conversations on the comp plan, and I will give them credit. They are actually implementing some of the things they talked about, like affordable housing. West Des Moines not had affordable housing in 35, 40 years, and they were talking about doing affordable housing, and they are actually following through. I'll give them credit.
A government company or agency doing something that they said they were going to do.
Well, and it's interesting, too, because they said to them that was very contradictory to what they've chosen to be in the past. So very, very interesting tangent for that city. But not every city does it the same, just because not every city was, quite honestly, developed in the same year.
I understand. I just didn't know how that worked.
Yeah.
When you said it had to do it every 10 years, I was just curious on that.
And you'll look at some of these city plans and go, this has drastically changed too. I mean, you can pull up West Des Moines comp plan back from the 90s.
Right.
And they had a very different idea about what was going to develop around Jordan Creek than what was today. At one point, the city of Des Moines had a comprehensive plan to put a mall over on 2nd Avenue and I-80. And that didn't happen. It's industrial going there being developed now. So anyway, just things that you guys can look into, hopefully, to help you make decisions when you're investing based on the cities.
How to look at stats, the trends, thinking about long-term investing versus short-term investing, why that matters.
Yeah.
Cool.
And we'll wrap this up here. I think at the end of the day, what I can say, though, is this, is the most successful investors I've ever come across in any investing, really, whether it's in stocks or real estate, are able to have much longer time horizons. If you can think out in 1 year, you're doing good. If you think out 10 years, you're doing better. If you can think out 100 years, you're doing fantastic. So, when you're looking at cities, you're looking at areas to develop in, again, maybe Adele is the next area if you have that plan for 100 years out.
Yeah. And we can get into different mindsets on how to do that, right? Because it's tough for a lot of people to think in that long distance time frame. But anyway.
Well, I mean, and Warren Buffett made a comment too about people that were trying to give money to change the world. He said, why change tomorrow's problem when he still have so many problems today? So it's one thing to say, I'm going to invest for 100 years until, I'm totally joking here, until we have a nuclear war, and all of a sudden that whole idea of investing 100 years went out the window because we're all, at war. So again, easy to say, much harder to do.
Yeah. Okay, cool. What do you got going on, Jared? How can people find you, reach out to you? What's going on?
What's going on here? Not much for going on. We are heading to, like I mentioned last week, we're going to Austin next week for Mega Camp. That's really interesting. I'll have some feedback when I get back about what we saw our maintenance across the country in the market. So it'll be interesting to get the pulse of the market on a nationwide basis. If you want to reach us, as always, just Google my name or the Catalyst team, Jared Huseman, JaredHusmann. Catalyst team, easy to find and get more information. And as always, by the way, guys, I don't know if you guys do or not, leave comments below if you guys have questions or want to know more what we should talk about, because sometimes we're just fishing for ideas. So if you have ideas you want to hear about, we'll happily digest and talk about them.
Yeah, if you can't tell, we just rant a little bit. We just talk. You reach out to me. Information is below in the video. So Darson Grantham at Keller Williams in Des Moines, you can find me. We also have live events every Friday morning. We have Smoky Road Coffee. We talk about real estate investing. It's not a sales pitch. There's no agenda. It's literally just shooting the shit with other real estate investors. And then the second Tuesday of every month, we meet at Nick's Bar and Grill from 6 to 8, and we'll talk about the market. We'll have a special guest speaker, and everyone can network after that. So come enjoy, meet other people that are investing, because, I don't know, that's how I grew my business, and I find a lot of fun doing it. So
yeah, it's just fun talking real estate. I mean, I could do this all day long.
Cool. Okay, see you later.
All right, see you guys.